Stock market update for the 10th of February. Let's look at the week that's just gone by and the returns that were to be had, and more importantly, the week ahead, and also some of the stocks that I own as well and why. Now, as a hedge fund manager, I have got some experience in what I'm doing here, and I think you will find it helpful. So it's all part of my campaign for $1million.com to teach 1 million people how to be better investors. Let's kick off with that first slide. Well, that was the performance for the week that you can see there, and quite a bit of red after what had been some good weeks. Tesla stands out, of course, and some of the healthcare companies. Let's have a look at some of that in depth, shall we? Before we do, just look at the price earnings ratios, which is one measure of valuation. It is a measure of the share price compared to the profitability of the companies. And the red means suggests overvaluation. Doesn't necessarily mean the stocks will fall by any means, but can be an indication of that. And really, energy and banks have been the undervalued ones. Now, I want to draw some images for you here. We're starting off with the S&P 500. I suspect it's going to fall back to its support resistance line over there. That commonly happens. That's the monthly MACD, and you can see it getting flatter. And one thing that you should be aware of is when the MACD touches it or gets closer to its moving average, you do tend to get a bit of a pullback before a move upwards. And I think we'll get that respite, we'll get that fall. So nothing to panic about if we get some profit-taking moves lower. Let's have a look then at Apple. Again, nothing I'm worried about here by any means. You've had a couple of days of it moving lower. You can see where I've put the projections and which direction I think it'll go. And it's going to move in this channel that it had been in for quite a while. And the monthly MACD is looking attractive there as well. In the case of Microsoft, all hands on deck. It's good news. Look at that. That is flattening, and you saw what last year brought. It fell, but you can also see when it's rising, you do tend to get some good significant moves. So I'm still long on that and still own it. In fact, I own 2 times leverage on Microsoft, both through CFDs and also through exchange traded funds. I don't do more than 2 times leverage. That's Amazon. It's dropped a bit this week, as you will have seen, and nothing to worry about again. Because these things tend to happen. Warner Brothers, I also own, just as another bellwether, just showing you some of the bellwethers, giving you a bit of a flavor of what's going on, and that's likely to go in that kind of direction over there. Okay, Nvidia. Now, when you've got what's called a reverse head and shoulders, then that neckline, which I've just drawn in red, down to the bottom there, tends to replicate itself to the upside, which would mean something like that kind of a return at 116%. Well, it's already given me from the start of the year when I got in, and if you follow me on my Telegram channel, you'll have seen this, or on my LinkedIn, that we're well on the way to making some of those gains. So I'm pretty pleased with where that's going and where it's gone so far. Tesla, same, good news, still in the right direction. And you saw it's flattened somewhat. I suspect that monthly MACD will do something like this, and this may well pull back before it goes to this target, which I've set for it over the next 12 months. JP Morgan, that's very much on target. You can see what we looked at. And 40% is my hurdle, as you'll know, for my pension, my SIP, my ISA, my son's junior ISA. And therefore, if I don't think 40% is realistic, and you can see why I've projected it and drawn it there, to make that point as to whether or not it's realistic, you can see why I have drawn it, and it is realistic. And I look at that and I think, okay, I'm fine with it so far. We also think it's undervalued. By the way, with all of this, I've used retail tools. I've not gone and used tools out of the Bloomberg terminal, because then you can access this stuff anyway. And whether you use Yahoo Finance or, as I've done there, TrendSpider, entirely up to you. I'm not going to plug any particular thing. The full report is for my private clients, of course. So this is the shorter bellwether stocks, the overall views. Do have a look at my campaign for 1 million. And just as importantly, don't forget to do all of this. Don't forget to subscribe, like, share, comment, and have a look at alpeshpatel.com/links, especially if you want to download free copies of my books or articles or more videos, anything like that. So, like I said, sorry it's an expedited, shorter version, but the private clients get the full-blown thing, including my whole portfolio and the weekly analysis on how that's doing. Thank you all very much. Hope you enjoyed it. Thank you.